For me, my philosophy is simple. What I know a lot about, I comfortably invest in. I will gladly deploy $5-10 million on baseball cards and not even flinch because I know what I'm buying. I know the product I'm buying. You've seen me do it over the years, so it's not like it's a, so I'll deploy that, no problem. Areas I'm not an expert in. Guy asked me a question yesterday saying, so what should I do to increase my rental income in the amount of properties I buy? What do you do? I said, this is the wrong Zoom because I'm not that guy. I don't know. My specialty is in real estate. My specialty isn't dealing with renters. I don't want that drama. I don't want my property manager to call me about that drama. I like to operate and build companies is what I like. When I was getting started at 21, 22 years old, and I had no clue what I was doing, I opened up a mutual fund account. And I started with $100 a month, okay? And I opened up a VUL. And I put $100 a month into it. That's when I was broke. And that money would just go. And gradually, I would raise it from 100 to 200, to 200 to 300, 300 to 400, 500, $1,000 a month. And then one day you wake up, you're like, wait, I got $360,000 in this account. That's kind of cool. How did this happen?
Happened to me.
Yeah. And then you're like, okay, what can I do with this? And then you get a little bit more and more and more sophisticated because people are dealing with additional things as well. Today, when you're looking at your money, it has to do with your age. Your risk tolerance at 64 should not be the risk tolerance of a 42-year-old and shouldn't be the risk tolerance of a 22-year-old. Those things vary. Ages vary. The other part about when it comes down to this is time horizon. You got short-term, mid-term, long-term. What portion of your money do you need short-term? If your daughter's getting married in 2 years and you need to be paying for that wedding and it's going to be a couple $100,000 or $100,000, you need to set that money aside because that time is coming. If kids are about to go to college and they don't have the GPA to get scholarship, you need that money to be set aside to be prepared. That's short term. Midterm, again, depends how old your kids are, depends if you're married, depends any of that stuff. And then long term. Then the last thing is with your money that you have, you sit there and you say, which portion of my money am I comfortable losing 100% of? That shouldn't be a big percentage. You could say only 5%, fine. So if your 5% is $100,000, $50,000, $20,000, $1 million, you can afford putting in risky investments that you may lose all of it, but you cannot lose sleep. So if you're the kind of a person that will lose sleep if you lose that kind of money, don't do it because it's going to mess with you. Only do it if you know your temperament. Investing is very different for different people. It's different for you than my temperament, than his temperament, than his temperament. People come to me and they say, why are you always sitting on so much cash and why are you not deploying it? Do you know how much money that's costing you? I said, that's my temperament.